In this video, we'll be discussing about the Laurus Labs के जो recent के results आए थे. So what are the results and इसके बाद में जो stock में impact आया उसके क्या क्या reasons है. Laurus Lab का जो business है वो management ने over the period of time कैसे build किया है अब तक, which is till now majorly a ARV focused business. एंड आगे जाके उनका जो बिजनेस है इट विल बी अ कम्प्लीटली ट्रांसफॉर्म बिजनेस जहाँ पे ARV का जो कंपोनेंट है वो कम होने वाला है एंड जो बाकी जो उनके बिजनेस है विच आर द हाई मार्जिन बिजनेस जैसे कि सिंथेसिस हो गया या उनका बायो बिजनेस हो गया या अदर जो फॉर्मुलेशंस या API का बिजनेस है दैट वी गोइंग टू डिस्कस इन डिटेल इन दिस वीडियो. सो अगेन वरुण इज देयर विद अस टुडे. So Varun, let's start with what are the different segments Laurus Lab is working on, and then we'll discuss about how this business got started, what is the DNA of a management, how they developed this business till now, and then what has actually impacted in this quarter. That's why we can see the negative impact on the share price also. And then after that, we'll discuss about what are the future triggers of the business. So let's start with what are the different business segments which Laurus Labs operate into.
So Laurus Labs 5 or 6 years ago was looked at as an ARV API company. But over the years, it has completely diversified into an integrated pharmaceuticals player. So presently, Laurus Labs has 3 major segments. The first one is Laurus Generics, then they have Laurus Synthesis, and the third one is Laurus Bio, which is a relatively new business for the company.
Right.
So under their generics business, they manufacture APIs and formulations. Now, API and formulations can be either ARV or non-ARV. So, ARV drugs are drugs which are used to treat retroviral diseases. ARV drugs are antiretroviral drugs. So, retroviral diseases like HIV or tuberculosis, these drugs are used for the treatment of those kind of illnesses. And in the non-ARV segment, they manufacture drugs related to anti-diabetic, cardiovascular and oncology. So for this, they manufacture both the API and the formulations. Then in the synthesis business, they have 2 segments. So one is called Laurus Ingredients and the other is their CDMO business. Now under the ingredients business, they manufacture various ingredients which are used in cosmeceutical purposes or for nutraceutical purposes. Okay. And then in the CDMO space, they do the contract development and manufacturing for innovator companies where they manufacture intermediates and APIs for them. And lastly, we have the biologics business where they manufacture biotech ingredients, enzymes and recombinant proteins on a CDMO basis.
Right. After that, let's now discuss about what is the DNA of a management, how they able to reduce their cost or how they basically earned or got economics of scale by which their cost of production kept on decline over the period of time. So let's understand that with one of the examples on a ARV side. So Varun, what is the DNA of a management or how they focus majorly on R&D and how they scale this business over the period of time?
Right. So Dr. Chava has always said that they are an R&D first company.
Right.
And the important thing to remember here is that Laurus has always been the lowest cost producer of whatever they do. Their plan is always to enter a product and be the best at manufacturing it. The reason I'm bringing this up is because in times like this, it is easy to forget what the management has been able to accomplish in the recent past, where the sentiment for the company right now is overwhelmingly negative, but that is not the case. If you look at this graph here, this is a graph which is showing the cost of production for efavirenz, which is one of their ARV APIs. So if we look at what they used to produce this drug at in 2009, by 2017 they had reduced the price of this drug by almost 60%. Right? So in 6 or 7 years. So this has happened through incremental innovations that they do. They keep refining their manufacturing processes. They keep bringing in more efficient processes to manufacture the drugs, which helps them become the cost leader in that segment. So Laurus has always been doing that, and over the years they have diversified from being an API company to a formulation company as well, right? They have a vertically integrated formulations operation where they manufacture the intermediates, the APIs and the formulations.
Right, and I think the very important point we must understand at this point is that the Laurus always starts with the API first and then the formulations. If you check with the other companies which are the giants in the pharmaceutical world, like Sun Pharma or these type of companies, they always started with the formulations. And manufacturing a formulation is not that difficult compared to manufacturing a API or ingredients or active or intermediates. And that's why Laurus first developed the scale in API, and then forward integrating to the formulations is not that difficult job. I think same is happened with the ARV side.
Right. So ARV is a kind of segment where the cost of the API makes up about 60 to 70% of the final drug. So to be competitive in this segment, you have to be an extremely low cost ARV API manufacturer. So once you become the lowest cost producer of the API, it is very easy for a company to forward integrate to manufacture the formulations, because manufacturing formulations is not as technically difficult as manufacturing APIs is.
Right. And that's why I think most of the Indian companies always focus on the formulations, and then they used to import the APIs from the China, which was the tricky part. And then after that, like we know like what has happened in 2019 when the API prices has increased a lot. Same thing has happened repeatedly in 2020 during the COVID. And third time, I think it is happening right now when there is a shutdown in China, and that's how the China actually controls the basically their different products. I was talking to one of the investors, so he was telling me in China what basically they do is they increase the raw material prices or basically API prices which they are exporting, and they reduce the formulation prices. What does happen due to that thing is like the competition gets killed, and once the competition is out of the market, then they can like play the market according to their wish. And I think that is a very good learning for the companies like Laurus Lab, where they initially focused on securing their backward integration or APIs, and then they are slowly moving on to the formulation side, where they actually can get a much better margins provided that they have the supply security or the raw material security. So that is I think a very good point, or the backward integration, where the company's DNA is all about that. So we must understand like how the company got developed till now or till this point of time. This information is not given in the stock prices. Stock prices also can be very noisy, and the actual core of the business may not be understand very well based on the stock prices. And right now the sentiment is currently at the bottom, where we must understand these things which are actually happened in a history of the company. And then let's understand now what is the progress of the company, how they going to like scale up in different divisions from here on. So let's discuss about how they have like basically able to diversify their revenue mix over the period of time.
So if you look at this graph, Laurus used to be a predominantly ARV API company. In 2016, when they IPO'd, about 82% of their revenues were coming from ARV APIs. Right. Now, the thing to note about ARV APIs is it is an extremely low gross margin business.
Right.
But what Laurus ended up doing was that they forward integrated into formulations. So we can see here from 2016 to 2022, the contribution from ARV API has kept reducing, whereas from 2019, their formulations revenue has really ramped up. It was only 2% in 2019, whereas it was 38% in 2022. So all of this API that they used to produce was being captively consumed to manufacture formulations, which is a better margin product for the company, which has resulted in the company actually increasing its margins over a period of time.
So now let's understand more about how the company is diversifying their complete revenue mix. Initially, it was a focus on the ARV side. Right now, if you check, and slowly diversifying into other major segment like the synthesis, or which is called as a CDMO business. And before 2 years, the company also acquired for their bio-based segment. So Varun, can we let's understand more about how the business got diversified from 2016 when they had a major contribution which was coming from the ARV API side. And if you check right now, CDMO portion also contributes a significant amount in their overall total revenue mix.
Right. So in 2016, when the company IPO'd, the CDMO business was only 7% of the entire revenue that the company earned. And at that point in time, like the CDMO business was very small for the company. What they used to do is they used to manufacture steroid and hormonal intermediates for this South African company called Aspen Pharmaceuticals.
Okay.
While that is a good high gross margin business, it was still a generic model.
Correct.
In the meantime, the company was also supplying APIs and intermediates for clinical phases, but the company did not have many commercial products.
Right.
Right. From 2018-19 onwards, we could see that the company started getting a couple of commercialized products, and the revenue from this segment really ramped up over the years. Yeah. So synthesis is a very high gross margin business for the company. Like Dr. Chava has said that the margins in their synthesis business is comparable to the best players in the industry right now. So if you look at Suven's business, Suven
Right.
has about 70-75% gross margins. They have 40-45% EBITDA margins.
Right.
So that is the kind of margins that they are enjoying in this business. So as the contribution from this business increases, the margins for the company are expected to go up over the long term.
Right. I will just make a one point here. We have created a 4-part series on a pharma where we have actually explained in detail about what is the CRAMS, how actually the preclinical, clinical, and commercial phase starts, or what is the development cycle of a particular drug. So you can watch that videos. I will give the link in the description section. So, and another point I think is like what kind of synthesis company is doing. If it is a commodity based synthesis or if it is a generic based synthesis, then definitely the margins can be lower. Like Vindas Bio or these type of companies also mention that they are into CDMO business. But the word CDMO is not that important. It is more important that are they doing the innovative based CRAMS or innovative based some research, or to help the basically innovator to manufacture their potential drugs at their Indian sites or at the manufacturer end. So that is more important, and that is actually high margin business. Generic thing may not be that high margins on a gross level or on a EBITDA level.
So now let's get into like why the stock of Laurus Labs is actually falling.
Right.
So the number one point is guidance miss, right? Like, so the expectations that the management had given the investors over the past 2 years is not being achieved right now, and the market is punching the stock for that. So the management had actually given a guidance, 2 years ago, that in FY23 we are going to have $1 billion of revenue. Now, when they gave this target, the dollar was at about 72-73 rupees.
Right.
And so the target at that time was about 72 to 7300 crores of revenue that they would have in FY23. Now, if you're looking at the 9 months revenue, it is about 4,600, 4,700 crores. So the company has said that we are not going to be able to achieve that. Right. And the valuations for Laurus was pricing in the 7,200, 7,300 crores of revenue with 30% plus EBITDA margins.
Right.
When the management said that they are not going to be able to do it, the stock is being punished for not living up to the expectations.
Correct. There is another point which we will shortly discuss about their revenue mix in their CRAMS or CDMO or synthesis business, which was dominated by the one of the molecule which is Paxlovid, which is the same case which we discussed in case of Divi's lab. So the molecule is different. Divi's was I think into molnupiravir, while in this case the molecule is different, but that was kind of a one-time revenue or very short period of time that revenue the company supposed to recognize, and once the COVID is like almost over right now, that revenue not going to continue in future, and that's how and I think it is not probably a mistake of the investors also, because here in these cases management also doesn't give the full disclosures like what actually is the revenue mix of each their division, because initially the business is I think like too diversified, many business divisions are there, and under that what basically molecules are there, how much is the contribution which comes out of each molecule, that is always a question.
That is always a risk with CDMO business, where there is a level of opacity. Like, these businesses are built on the principle of protection of intellectual property, and the companies, they sign various NDAs with their partners where they can't disclose how much they are making or what they are making for who. So that is one risk that we always have to keep in mind when we are investing in CDMO businesses, that there is a level of opacity. We won't have complete visibility of what is going on behind the scenes.
Right, and we'll come to another point is that currently I think if am I right, commercial molecules or total projects which they are working is about 50 projects or 60 projects, and out of these 50 to 60 projects they have 10 commercial products, and management has said that they are going to add 1 or 2 more commercial molecules in FY24, and I think 1 or 2 more after that. So we as an investor actually don't know what is the potential of these molecules. These molecules can be really very large molecules from where the good amount of revenues can come, or they might be small molecules. So it is quite a difficult thing to judge from a outside what can be the potential of these molecules. And I think similar case which has happened with the Suven Pharma also, like there has been a spike into revenues couple of years before, and then the business has gone into the consolidation, and again there is a ramp up. So can you explain with this case study, Varun, like what has happened over there and how we should actually study or understand the CRAMS or CDMO based businesses, how they ramp up, and like there is always a, what you can say, so there is always can be a skewness in this business. So let's understand about that in more detail.
So with the CDMO business, if you look, like most of the investment for the company is always front-ended and most of the returns are always back-ended.
Right.
So when a company gets into the CDMO business, for the longest time they are only going to have projects which are going to be for clinical supply. So these are going to be like small batch manufacturing for different kinds of clinical trials that are going on. But as and when a company gets more and more commercial products, like the products that for which they supplied for phase 1 have gone on to commercialize, then the company can actually see like exponential growth.
Right.
Like Dr. Chava talked about this. He said that the growth in the CDMO business does not come in percentages.
Right.
It comes in multiples. Currently, the company has 10 active projects, maybe 9 if you exclude Paxlovid, and they are getting like yearly revenues from the supply of these molecules. Next year, they are going to be adding 2 more. That will be in addition to the 10 projects that they are already getting right now. And the year after that, they're going to get 2 more. So the growth in this business is actually exponential.
Right. We'll discuss about these different CDMO projects and what can be a potential of this in a while. Let's understand first what has went wrong currently for the company, or where there is a mismatch between the investors' expectations and the delivery by the company. So let's understand about the revenues and margins which the company has posted over the period.
Right. So keeping all the expectations and guidance aside, the numbers for the company are not bad.
Right.
On a 9-month basis, the company has a 33% growth in their revenues, 26% growth in their EBITDA margin, and 15% growth in their PAT margin. In the current environment, there aren't a lot of pharma companies that are posting these kind of numbers.
Right. And having a EBITDA of 25 to 30%, 30% basically they had historically, that is a very, very good number if you exclude the price component aside.
Right. So clearly, but there has been like a small contraction in their EBITDA margin. Like if you look at year on year for Q3, there has been a 2.1% contraction in their EBITDA margin, which can be seen here, right? In the 9 months, the revenue has grown much faster than their EBITDA and PAT. So what has happened, the management has said here, is that ARV, API and FDF were the major reasons for the reduction in these margins. So this is the revenue for the company from the ARV sales. This includes the API and the FDF revenue. And this is the biggest segment of the company. In FY22, it contributed about 50% to their overall revenues, whereas in 9 months, it has been 35% because of the pricing scenario that they are seeing right now. So the FDF sales, there has been a 53% decline on a 9-month basis, right? So what has happened is there has been a severe decline in the pricing of ARV drugs. So the company had the worst performance in Q2, where they only did about 55 crores of ARV FDF sales. So let us take a look at the reason for that. So most of the FDF procurement for ARVs is done through bodies like the Global Fund or PEPFAR or like the South African government or the Indian government, right? Most of the HIV cases in the world are in South Africa. So South Africa is the largest acquirer of HIV drugs, followed by the Global Fund and PEPFAR, right? So these bodies, they acquire the drugs and they distribute them free of cost to the public. So if we look at the pricing for the South African tender, which came out recently, so DTG, which is their major molecule for Laurus, there has been about 50 to 53% decline in the pricing of DTG.
Right.
In TLD, there has been about a 31% decline in pricing. EFV 600, which is also an important drug combination for the company, there has been a 16-17% decline in the pricing.
Right.
And what happens is that the tenders for these bodies, they usually move in similar directions. So the South African tender, this was the pricing. So the expectation is that the tenders for the Global Fund and the PEPFAR tenders are also going to have very similar pricing. So there has been a significant price erosion in ARV FDFs, which can be seen over here in the ARV FDF sales quarter on quarter. So in FY21, the company did about 1500 crores of sales of FDF, whereas they've only done 470 crores of sales in the 9 months currently. So the company has been selected as a panel supplier for the global fund. So this gives them a little bit of visibility for the next 3 years. It's a 3-year contract. So they'll be supplying from 2023 up to 2024, which will be FY26. So the company gets visibility in terms of volumes, but the pricing is still going to be a challenge for the company. Apart from that, if we look at the API sales for the company, the API sales have actually grown on a 9-month basis, 22%. So what we are seeing here is the FDF, which is a high margin business for the company, has declined.
And that's why the gross margin side, we can see the decline.
Right. And the API sales have increased. So the mix of the company, which the company was working towards, that we don't want to be an API supplier, we want to be an integrated formulation supplier, has completely reversed in this quarter, which has caused a contraction in margins.
Right. And after that, we'll also discuss about how they're able to scale up other verticals over the period of time. So let's start with their non-ARV side businesses. In non-ARV, they have basically the API manufacturing and the formulation manufacturing, where the margins are a bit better compared to their ARV APIs and ARV formulations. So Varun, can we have the numbers for the non-ARV APIs as well as non-ARV formulations, and what type of capacities or how much capacities they are adding going forward in future?
Right. So even in non-ARV business, it is kind of a similar story to ARV, where there has been a 35% growth in their API business, but there has been a 27% decline in their formulation business.
Okay.
So Laurus had invested in a lot of capacity for their formulation business.
Right.
At the end of FY22, they had a capacity to manufacture 4 billion tablets.
Right.
And they increased that to about 10 billion tablets in FY23. And initially the management has said that the entire utilization for this new capacity will be done by Q3 of this year. Okay. Which has not happened. So there has not been a ramp up of this facility.
Right. So there has been a good amount of capacity which is sitting there, which is not fully utilized, and probably the operating deleverage might have played.
Yes.
And that has actually affected their margins.
Yes, 100%. So that there has been operating deleverage, and the sales mix of formulation to API has also skewed in favor of API.
Which is a low margin.
Yes. Right. Apart from that, they have the Onco API business. So under the non-ARV API and formulation business, they have the Onco API business.
Right.
In this business, there has been a huge decline year on year. So the management has said that there has been lower offtake of one key product of theirs. So there has been a 46% decline in year on year in Onco API sales. And this is a high margin business. This is in the non-ARV margin hierarchy. The Onco APIs have the highest margin, followed by the non-ARV APIs, followed by ARV APIs. Right. So what has happened this quarter is that their low margin businesses have grown and their high margin businesses have declined.
Right. But I think the story is not over yet, because their synthesis business, which has able to ramp up very significantly, and I think it is the highest business for the company. And let's understand how the management have scaled this business, which is I think a really commendable in last 4 or 5 years, and that is actually a focus of the company in going forward also. Because as Varun has said initially, that we have to actually understand what kind of a capex is the company is doing, rather than understanding a molecule, because that information is not publicly available. So we have to understand what capex is company has currently doing, and historically also what kind of capexes they have done into a synthesis or CDMO business. We'll talk about those capexes in a little while. Let's first understand about the revenue ramp up from 2016 or 2018 onwards for their synthesis business.
So by and far, this has been the best year for the company in terms of synthesis. Last year, they'd done about 917 crores in CDMO revenue. This year, in 9 months, they've already done about close to 2000 crores sales.
Right.
But there is a caveat in that. So Paxlovid, which is a COVID molecule, the sales for in the first half, the sales for that was about 1000 crores, and the first half sales from the synthesis business was about 1300 crores. So excluding Paxlovid, the CDMO business only did 300 crores of revenue in the first half, which is below the run rate that the company has been seeing historically. So the management has said that because Paxlovid is not going to be there next year, the revenues for the CDMO business at best will be flat.
Right.
Or at worst, there could be a small degrowth in the business.
But again, I think we have to see the CDMO case with respect to upcoming projects or upcoming specifically commercial projects. So that also can ramp up their revenues. May not be next year, but probably FY25 onwards, because right now also there will be certain amount of molecules or number of molecules which are under phase 1 or 2 or 3 development, which will eventually get to the commercial phase. So we have to again understand the DNA of the management, what they are trying to do compared to checking the stock price. So I think this business has started with the ARV side focus, and right now the management kept on de-risking or diversifying their overall revenue mix in different blocks, starting from the synthesis, and then we'll now discuss about the bio side also, and the non-ARV formulations and non-ARV APIs. So what is the story, Varun, related to the bio side? They have acquired a company for the bio, and they are slowly ramping up this business. Some future capex are also planned into this side, and what is the potential about the bio business, let's say in next 3 or 4 years?
Right. So if you look at the bio business, Laurus had acquired a company called Richcode towards the end of 2020, and in the year 2021, there was only about 9 crores of revenue that the company got from this business. So when the company acquired this business, they had two facilities, R1 and R2. So in R1, they had about 10,750 liters of
Right.
capacity, which is a small capacity. And then they were in the middle of ramping up their R2 facility, where they had about 180,000 liters of capacity. So all throughout 2022, the bio business was in a ramp up phase, and FY23 was supposed to be a year where the company sees the full effect of the bio revenues. But we have not seen that. Like, there has been a quarter-on-quarter decline for the bio business, and in Q3 it was the lowest at about 22 crores. So the management has said that there was some unscheduled downtime where they had, because of some productivity issues, there was
Right.
a mismatch between their upstream and their downstream capabilities,
Right.
which they have fixed right now, and that had led to some deferred production during the quarter, which might come in Q4. But overall, the management has said that they expect about 30 crores of revenue quarterly from this business, which makes it about 120 crore annual revenues. But clearly, in this year, we are not going to be recognizing that. So there was that issue as well. But the management has said that they have added more capacity in this business. They have acquired the land next to R2, where they are going to be enhancing some capacities. So this business could perform good going forward in FY24 or FY25.
Right. I think the real trigger of the bio business is after adding the capacities at R3. So if we can check about the R3, the total capacity addition will be done in 3 parts of 650,000 liters each, and total it will be about 2 million liters capacity that they will be adding over the period of time. The ramp up might take, so I think the real potential of the bio business we might see in FY25 or FY26, where the total potential may be more than 1000 crores, which is right now at the max can be 100 to 120 crores annually.
So apart from that, there is also like the concern of debt for the company. So currently the net debt to EBITDA for the company is at 1.3 times.
Right.
And the understanding of the market was that, as the capex ramps up, the company is going to be using this cash to pay down the debt. But in this quarter, the management has said that they have absolutely no plans of paying down the debt in FY24. So the debt repayment has been delayed to FY25. So the company has done about 612 crores of capex in the first 9 months. And they expect to do maybe another 200 to 250 crores in the next quarter as well. So that's about 850 crores of capex in this year. And the same will be done in next year as well. So the company has a lot of capex coming up. So they don't have any plans of paying down their debt in the next year. And in a rising interest rate scenario, that is not a good thing for the company.
Right. So now let's understand more about what is the future plans of the company, from where the growth going to come in. Actually, in which segments Laurus Labs management have planned the capexes, and where the growth can come, and what will be the revenue mix, let's say in next 3 to 4 years, and what can happen to their gross margins as well as EBITDA margin. Because right now in this quarter, both has came down. One reason is change in revenue mix, and second reason is operating deleverage, where the gross as well as EBITDA margin has taken a hit. So now let's understand firstly where the management is planning to add the incremental capacity or incremental capexes.
Right. So Laurus currently is in the process of a multi-year capex.
Right.
So they are increasing capacities in all of their business segments. So in their API business, they have increased their capacities by more than 2,000 kiloliters in this year alone. So which will come online in FY24. So FY24 we are going to have maybe 2,000 kiloliters more capacity for API, and all of this is going to be for non-ARV API. So it is going to be a little better margins than ARV API. Apart from that, they have acquired land for Unit 7 and Unit 8. So they will come online towards the end of FY24 and towards the end of FY25.
Right.
Apart from that, the company is also doing a capex in the formulations division. So currently they only have one facility for formulations, which is Unit 2. The management wants to de-risk that. So they are investing in a new facility for formulations. So Unit 9 will come online towards the end of FY25. We can see the revenues from that probably in FY26.
Right. And I think this formulation, what you are saying, it's again a non-ARV formulation.
Yes.
That is the very key understanding one should have. They are not adding any capacity into a lower margin business, which is the ARV business, and all incremental capacity, either it is on the API side or a formulation side, that is all on a non-ARV side, right?
Right. Apart from that, the synthesis business. This business is seeing most of the capex. So here they are building a dedicated R&D center just for the synthesis business. So the long-term vision for the business is that the synthesis business can be demerged from the rest of the business, because that is the good business and it is getting a bad valuation because of the other businesses which might not be as good for the company. So to do this, the company has incorporated a separate subsidiary called Laurus Synthesis Private Limited. So under that, they are doing a lot of capex which is dedicated for the synthesis division. Right now, their API capacities are fungible, where they manufacture their generic products as well as their synthesis products in the same facility. But now the company has decided that they are building a dedicated facility just for the synthesis business.
So I think we have to understand the synthesis business probably not according to today's revenues, but like let's say in next 3 or 4 years, and when the company will actually demerge this business, the valuations which the current business is getting about 3 times the price to sales and about 20p, I don't think like any innovative based synthesis business gets 3 times price to sales. I am expecting at least it should be 5 times or more than 5 times. The EVs is also after a correction probably trading at about 5 to 6 times price to sales, or Suven Pharma is trading about 7 to 8 times. Same is the case with the Syngene. Syngene is not currently at the manufacturing end, but they are definitely on the innovative end where the valuations are quite high. So another trigger for the Laurus Labs can be re-rating based on the demerger of the synthesis business once it will reach to a decent amount of scale, and from there the shareholders can get, I think, a good amount of wealth over the long period of time.
Right. And finally, the bio business, where they are doing the capex, which we already discussed about. So they are going to be adding about 2 million liters of additional capacity, which is going to come in 3 phases, 650 kiloliters each. For this, they have already acquired the land near Mysore, and this facility will probably come online towards the end of FY24. So the management has also said that FY25 is the year to watch for the bio business.
Right. So, and apart from bio business, most of the capacities which are coming up till FY25, and I think FY25 and FY26 will be the very key year for the business, where the mostly the ramp up will start happening, and the basically revenues or that ramp up outcome will start flowing into the revenues as well as EBITDA and profitability. So one should actually understand the business in this way, that like I don't think like much things going to happen in FY24 probably, but we have to actually see what can happen in FY25 and FY26 financial year. Now let's understand about like what is the future outlook for the different divisions or each divisions.
Right. So we'll start with the API and their formulation business. So currently what the expectation is that there's the price erosion for the ARV business is going to stop. Like they're probably at their bottom right now, and the company has been selected as a panel supplier for the global fund. So they have a good visibility on volumes. They have a decentish visibility on prices. So, and the management has said that the prices are not going to erode further from here. This is the absolute bottom. But the important thing that the management has said is that they are not going to be investing anything else in the ARV business, like we already discussed. ARV business is a low gross margin business for the company, and all future investments in Laurus Labs are going to happen in the non-ARV segment. So in the non-ARV segment, the idle capacity that they have in their FDF segment right now, there's going to be a ramp up of that. So the operating deleverage part that we've seen this year might not be there in FY24 as that capacity ramps up. So they are also expecting a recovery in the onco API business. The management has also said that the unit 4 where they manufacture their HP APIs, they're going to be increasing a little bit of capacity over there as well. And the management has also said that the R&D on sterile products has started, and they are working on some priority projects, and these projects will probably finish development in the next 3 or 4 quarters.
Right. Like after that, let's discuss about the what kind of capacities are going to come into the synthesis side, because management, I think in this quarter con call also indicated that they're going to add the incremental capacities in animal the healthcare side and as well as the into the agrochemical side. So let's discuss about that side also.
So the major capex that is coming into the synthesis business is, first thing is they are building a dedicated R&D center just for the synthesis business. So this is going to come online by the end of FY23. Apart from that, the company is building a unit 2 and a unit 4, which is going to come online by the end of FY24. And then they are also building a unit 3, which is going to come online by the end of FY25. So management has currently said that they have a good visibility on where the CDMO business is going.
Right.
So currently they have about 60 active projects and 10 commercial products. So it is a mix of both APIs and intermediates which they are supplying. So the management has said that a couple of products are going to go commercial in FY24, and then some more are going to go commercial in FY25. So that exponential growth in the CDMO business, we are going to see that in FY25, FY26. Apart from that, the new dedicated R&D lab will have sterile capabilities, and the management this quarter also revealed that they are entering into the animal CDMO, animal pharma CDMO and agro CDMO as well. So they will be having dedicated blocks for these as well in the new facilities.
Right.
So they are expecting to qualify one of the dedicated animal health blocks by the end of FY24. So serious revenues from this business is only going to come in FY25.
Right. And another thing, the management has said that like their margins in animal pharma or animal healthcare side would be comparable compared to the human API side or human CDMO basically side. So there won't be any erosion because of the animal healthcare CDMO contracts which they're going to fulfill from FY25 onwards.
Yes, definitely. Apart from that, they also have the agro CDMO which they are entering. So currently the company has constructed a pilot plant, and they are producing registration batches from there. Major revenue that they are going to see from this business is also going to come in FY25. So like we saw in Suven's case, Suven also has both the human pharma and the agro CDMO.
Right.
And their pharma CDMO has much higher margins. They have like 45-50% margins in their pharma CDMO and about 30-35% margins in their agro CDMO. But the asset turns for the agro CDMO are much higher. So
Right.
in the end, the profitability is more or less similar.
Right. We have to check the ROC basically at the end, and the good understanding or the good case study you should do is about the PI industry, where about like 70 to 80% or up to 90% of their business is basically based on their innovative based CRAMs which they generally do for the agrochemicals. So Laurus Lab is basically opening another division or opening another basically a sector where they can face, which is the agrochemicals. Again, the company is going to focus more on a CDMO side where they will be developing intermediates or the active ingredients. They are not going into the marketing or the final formulations for that particular agrochemical scheme.
Right. And also, like, if we study Suven Pharma's business, like, we can tell, like, the management has always said, like, we have better visibility in the agro CDMO. Like, the innovators always give them, like, in advance that, this is this much quantity we are going to require on this quarter, and that quarter, and that quarter. So, the revenues from the agro CDMO are much more stable compared to pharma CDMO. Suven's pharma CDMO revenues are very lumpy. In the quarter where they get a commercial order, their revenues spike, and the next quarter if they don't get it, it's down.
Right.
But if you look at agro CDMO, it is more or less stable.
Right. Only one issue with the agro side is basically it can get hit due to the global monsoon. But if your portfolio is well diversified enough, then that effect or that negative effect also can be countered, or due to the diversification, the final end effect of that effect might be nullified. But over the period of time, I think it's good that the company is going to more and more diversify, and that's why the particular molecule effect or particular division effect which we are currently seeing right now due to the ARV side, which may not act in this way in future, that due to the further diversification of the business.
And lastly, we have their bio business. So Revenues from this business, there will be like maybe an incremental increase, but it's mostly going to be flat in FY24 because there isn't much capacity coming online, and that is what we can expect. The 30, about 25 to 30 crores run rate, quarterly run rate, 120 crores from this business next year as well. We already talked about the land that they acquired in Mysore, where they are going to be increasing their fermentation capacity. So the 2000 kiloliters, which will come online at the Mysore facility towards maybe the end of FY25 or FY26. So that has a potential of about 300 crores run rate annually, about 1200 crores annually.
Right, and which is at the max right now about 30 crores quarterly, or at the max about 120 crores yearly or annually. So this new addition or this new capex at R3 going to increase the revenues of a bio business almost at 8 to 10x. So that is a huge possibility. Another thing is, which I feel, is basically the margins improvement in the bio business, because the products which they are currently doing are probably a commodity based products where the margins are might be thin, but once they will add the incremental capex in their different sites, the margins improvement also might come in future, and that is how basically the overall EBITDA margins of the company can go up from here, or the margins might improve in future. Varun, can we discuss in short about which type of products they are manufacturing at their bio-based facilities and where they can reach in future?
Currently, the bio business of Laurus has three major products. So one of them is biotech ingredients, and then they have enzymes, and they have recombinant protein. So currently what they are manufacturing is biotech ingredients. So this is a lower margin business. It is a commodity sort of business where the company is manufacturing trypsin or other products which are used in vaccine manufacturing. So currently a majority of their assets are tied up into producing these lower margin business. In the future, the company has said that they want to enter into CDMO for the bio products, where they will be manufacturing lab grown meat or other such products like milk protein or whey protein or any of that, which will not be derived from animal sources. So the recombinant protein business of the company definitely has much higher margins than what they're producing right now. So not only will we see a ramp up in revenue because of increased capacity, we'll also see an increase in margin because of better product mix as well over there.
Right. So let's conclude this video basically by understanding what has happened till now and where the future lies. So I think the correction in the prices or the valuation has happened firstly because of change in revenue mix, where basically the margins on a gross margin as well as EBITDA margins have basically got hit because of change in revenue mix. Second thing which has played out is, I think, the operating deleverage, and due to that their EBITDA or the profitability got affected, and that's why the stock also got derated. But I think right now the current valuations at about 340, 350 rupees where the stock price is, I think that the fair valuations may not be very expensive, may not be very, very cheap. But from here, if the stock further corrects by say 15-20%, I think the stock will enter into a very, very good valuations band. And definitely it is not a recommendation at all. We are just discussing for the educational purpose what company has done till now and where the future basically lies and what are the valuations according to our understanding. And the story of the Laurus is based on the capex story, where they are putting the capexes into a various businesses or various business segments, where the margins of the business are much superior compared to what they are currently are at. So this is all about the Laurus Lab understanding by Value Educator. And if you are enjoying these discussion sessions with the Varun, who is again a pharma analyst at Value Educator, please let us know in comment section. We'll be coming up with the more and more videos, because right now pharma and chemicals sector is going through a really very, very big pain, and at this point probably we can help you out actually by understanding or sharing our understanding with you ki what basically is happening into this sector. So we can come up with the other videos like what is happening with the Gland Pharma, where the stock has also corrected more than 50-60% over the period of time. What is happening basically with the Piramal Pharma, again the same story. So here actually you can get benefited a lot based on whatever study we are doing at Value Educator. So please let us know which type of videos you want next Saturday. We'll definitely create those type of videos for the educational purpose. And if you are getting benefited out of it, please make sure you like this video and subscribe to Value Educator channel. And definitely you can share this video along with your friend so that potential investors can get benefited out of it. And you can join the Microcap Club, where we do a lot of scuttlebutt, understanding of the various business model. We go and meet the management. We also do the plants visits, where we actually understand what is happening on ground about the different businesses. So if you join the Microcap Club, you will get a different platform where you can discuss various businesses. You can ask me your doubts. There is a separate section created at the website where you can get the various businesses consolidated understanding, quarterly various reports or various discussions which we do. And again, we also do the quarterly questionnaire session with the club members where your different doubts can be solved by the team of the Value Educator. So if you are not joined the Microcap Club, you can definitely join the Microcap Club. You will get the link in description.